describe, explain, discuss and evaluate the types or forms of investment based on their investment factors, such as the return on investment, the investment term, tax implication, and the influence of inflation. So the first one we will be looking at is the business investment. So what is the return on investment for a business investment? It is the amount that the capital that was invested has earned in a certain period of time. And then the investment period or term is, it's a long-term investment. Time must be allowed for businesses to establish itself and grow. The tax implication. Dividends from companies is taxed at a rate of 15%. Profit from a partnership is added to the taxable income of the investor, and profit of a sole trader is added to taxable income of the investor. Then the inflation rate. Initially, the return on investment could be lower than the inflation rate. However, the more successful the business become over time, the higher the return on the investment could be, thus beating the inflation rate. Then secondly, shares. The return on investment for shares, huge profits could be made in the value of the share that increases over time. Huge losses would be made if the value of the share decreases over time. Then the investment period. A share is a medium to long-term investment. A share can also be sold at any time except for a BEE share that must be kept for a certain period of time. And then the tax implication. Dividends are taxed at 15%. Capital gain tax is payable in the event of the sale of the share at a higher price than the original purchase price. And tax payable is calculated after providing an exemption on the first 30,000 Rand of capital gain. The inflation rate over the long term has proven to beat inflation rate. Unit trust. The return on investment for unit trust has huge profits and could be made if the value of the shares in the portfolio increases over time. It also has huge losses if the value of the share in the portfolio decreases over time. The investment term for unit trust is a medium to long-term investment, and it can also be sold at any time. The tax implication for unit trust. Income tax is payable on the interest income received. Also, capital gains tax is payable when the investment is sold. The effect of the inflation rate. Over the long term, unit trust can beat the inflation rate. Government retail bonds. The return on investment for government retail bonds says that interest is paid to the investor by the government at a fixed rate. There is a low return on the investment. The return on the investment is guaranteed. And the period for a government retail bonds is a fixed period between 2, 3 or 5 years. The tax implication. Interest earned is added to the taxable income of the investor. For persons under the age of 65, the first 23,800 Rand in interest received during a tax year is regarded as tax-free or exempted. For persons over the age of 65, the first 34,500 Rand in interest received during a tax year is regarded as free or exempted. The impact of the inflation rate. Inflation linked interest for the term of the investment.